Thanks, Eric. Welcome everybody to Friday session for multifamily virtual issuer training. Let's get started. As was mentioned, these are the four presenters for today. One thing that we do want to do is get feedback from you from the session on Wednesday. So please use the annotation tool and click the T for the text, typing on the whiteboard screen. Let us know any takeaways that you really gleaned from session 2 and any open questions that you have. So Eric, if you could turn that tool on, and participants, if you could give your takeaways and your unresolved questions. Okay, very good. I see the 4 record types, PLSV. That was a key component of Wednesday's training. I know there were a lot more takeaways. There we go. Pool and loan screens in RFS. Very good. Very good. In this training, we want you to know how each of the pool and loan screens looks and all the features, the expandable plus signs, all the different features with each of the screens. Different exception types. Very good. Yeah, we covered the RFS 111s and 204s, the E's and the C's. Summarization, very good, very good. Oh, let's see, can I drag this over? Eric, if you could unstack any. There we go, thank you. Clear RFS 111s and 204s, very good. Download exceptions of CSV Excel. Excellent. Address E's, yes, first. Perfect. A few more, let's get to 10. See if we can. All right, thank you. Last record in becomes the date of record for the report period. Excellent. That is very important. All right, any questions? Any? Bulk sum is 90% of data. Very good. Very good. Yeah, these are the key takeaways. You all have captured that very well. Submitting a new file will replace the old data. Yep. Very good. All right, Eric, if you could export this slide before we move on. All right, thank you. You all have covered that so well, but let me recap what we did on Wednesday. We did review the 4 file layouts, pool, loan, sensitive, and various. We discussed how to edit and correct records, went over the calculations performed by RFS, and we noted which fields you are required to report. We covered exception feedback module and the navigation to the different access points to get to the data. We spoke about how to retrieve and download files, and remember the preferred method is for download. That way you have the full set as of a point in time where you can access the data in that file. And we reviewed the file submission and reviewed if a file was accepted or rejected. Okay. And now I'll turn it over to Christy.
Thank you, Steve. In today's final session, we will focus on these two bolded modules on the slide. We will get started with additional reporting requirements. In this module, we will review monthly and quarterly reporting requirements and explain the timeline for additional reporting requirements. Prepayment penalties must be reported by 7 p.m. Eastern Time on the 4th business day. The monthly reporting certification opens on the 10th business day, with the deadline being 7 p.m. Eastern Time on the 14th business day. Loan matching and suspense should be worked monthly. CAVs and with it are reported quarterly. Annual financial documents are completed yearly, which they should be done now because the deadline will be December 31st. Eric, would you please turn on the annotation tool? So using the annotation tool, could you place a sticker on any of these reporting requirements that you are familiar with? Perfect. I love all the participation. That's great. Yes. And actually, it is the master agreements that are due before December 31st. The annual financial documents are the ones that are due within 90 days of your fiscal year end. So, wonderful. Thank you so much. We will move on. Prepayment penalties must be reported by 7 p.m. Eastern Time on the 4th business day. However, they may be reported as early as the 1st business day. To report the prepayment penalty in RFS, you would navigate to the PAMF screen. Then you would click on the Prepayment Penalty tab. Input the prepayment penalty amount and the payment date. Don't forget to click the Save button at the bottom of the screen. You may notice that there is a new field on the screen. A new RFS enhancement on the prepayment penalty screen is the loan UPB, which is populated from field 23 of the loan record. I will explain why this field was added in the next slide. Also, once all of your prepayment penalties are entered, you should click on the download in the dark blue bar and export all of your prepayment penalties to a CSV or Excel file. This is what you should compare to your final pre-collection notice for balancing. As a reminder, it is your responsibility to review your final pre-K to ensure the prepayment penalty amounts are correct for what you reported in RFS compared to what is on your final pre-collection notice, which is posted on the 6th business day in eNote. Again, this download is a great way to ensure that you have reported all of your prepayment penalties for the current month and the total prepayment penalty amount balances to your final pre-collection notice. This is a new RFS enhancement which was created to notify an issuer if you enter a prepayment penalty amount greater than 10% of the loan UPB. A true story, an issuer entered the loan UPB as their prepayment penalty amount. This very large error was not identified until after the 4th business day, which is after the reporting deadline. The loan UPB amount on the screen is used in the calculation to determine if the prepayment penalty amount is greater than 10% of the loan UPB. If the amount entered is greater than 10% of the loan UPB, a pop-up message will be displayed stating to review the amount entered. Then you would click OK and then Save if the amount is accurate. If the amount is inaccurate, click OK, correct the amount, and then click Save. Now on to monthly reporting certification. Monthly reporting certification opens on the 10th business day, with the deadline being 7 p.m. Eastern Time on the 14th business day. To navigate to this screen in MGM, you would click Tools, then PAEF, give me 1 second, sorry. You would click Tools, then PAEF, and then click the Summary tab. The monthly certification link can be found in the lower right-hand corner, being highlighted with the red box on this slide. Would you please raise your hand if this screen looks familiar? Wonderful. Look at all those hands. That is great. Okay, Eric, would you please clear the hands? If my name on the 11702 form is Christy N. Christensen, and my name on the token form is Christy Christensen, I would not be able to certify as my names do not match on both forms. In order to complete the monthly certification as an issuer, you must be a signer on an active HUD 11702 form in MAMS. Also, the name on the HUD 11702 and the RSA Secure Token form must match exactly. Like in my example before, my name did not match because one had my middle initial. For a subservicer, the user must be a signer on their internal issuer's HUD 11702 form and must have an active HUD 11707 form in MAMS. A quick story. A while back, an issuer missed the 14th business day monthly reporting certification deadline because only one person at their company had access to complete this certification, but they were out on an unexpected medical leave. Therefore, a best practice would be to have multiple backups with RSA soft tokens for the monthly reporting certification process. I will now turn it over to Nancy.
Good morning, everyone. Ginnie Mae loan matching is an automated monthly process that electronically matches issuer reported data to the agency reported data. For multifamily, that would be USDA Rural Development Multifamily Agency data and FHA Multifamily Agency data. We take your reported data from the loan record for specific fields such as case number and OPB and match it to the data we receive from the agency. If the data does not match, then it appears on a download. The matching criteria is, the matching criteria is FHA case number and OPB for project loans and mortgage rate for construction loans. This also applies to rural development, so it's a two-string match. Issuers are asked to resolve their non-matches every month. We match on the agency case number, which is a 15-digit case number. The format can be found in APM 02-17. Can you please raise your hand if you work matching and suspense? Do I not see any hands? Ah, didn't have my screen large enough. Okay. Okay. To access the matching and suspense, you go into the My Jenny May system and select Tools, and then under that you will select the MAS under the Application screen. If you use a subservicer, can you please raise your hand if they work your matching and suspense? Okay, I saw a couple of hands. Great, great. Matching and suspense errors are accessible on the Downloads tab. There are 7 downloads in RFS, which only 3 apply to multifamily. For the insurance matching download, you will pull that download on the 6th business day. We run matching on the 5th business day, and you will be able to see the non-matches on the 6th business day. You may make corrections between the 1st and the 10th business day. We will run matching again on the 10th business day, and you can pull an updated download on the 11th business day to see if any of the changes, to see which other changes have occurred. We have added a 3rd and final loan matching before we close on the 25th calendar day, and this has greatly reduced matching errors that run over to the next month. We talked about the various record on Wednesday. For loan various suspense, you may pull the download on the 7th business day. There is an updated multifamily reporting workflow that will be posted along with the training that will contain all of the new mass dates. For non-matching downloads, you will access the Matching and Suspense module. There are several gray boxes across the top. This is where you will pull your downloads, like your insurance and various suspense download. If you have any questions or you need guidance, there is a user guide available for download in the last gray box on the screen. Just to note, again, all RFS modules have a user guide. For loan matching, a record is suspended if the reported data has been matched to the agency data and then the issuer has submitted a change to the original data. If you have suspended records, you will receive a loan matching suspense e-notification. On the screen is an example of this notification. Would you kindly raise your hand if you've seen this e-notification before? All right, I see several hands are raised. Does anyone like to share in the chat box what you would do when you receive this notification? Thanks, John. I see Newbar is typing. John, so let's give them a minute to finish their typing. So while they're okay, so we go to review the suspense download and then address them as needed, then send an email to Jenny May Suspense. That is excellent. I was going to say the same thing. Good. Okay, if you look at the bottom of the e-notification, we ask that you return all of your responses no later than 9 a.m. Eastern Standard Time on the second to last business day. This is when we ensure that all suspense records are processed. And if you look at again, the bottom of this notification, it gives you Jenny May Suspense at Deloitte.com. That is where you return these to. If you send them to any other email address, they probably will be overlooked and may not be worked. Okay. Okay, matching and suspense exceptions again are accessible on the download tab. There are 7 downloads on RFS, to which 3 apply to multifamily. Insurance matching, which you would pull on the 6th and 11th business day after we run matching. There is not an e-notification posted for this, so you must go into your downloads and look to see if you have any data. You will receive an e-notification for loan matching suspense. Now I'll turn it back over to Debbie. Thanks.
Thanks, Nancy. Good morning, everybody. Quarterly custodial account verification reporting in RFS, also known as CAVs. Issuers must submit CAVs between the 6th and 15th business day of March, June, September, and December per MBS Guide Chapter 16-8. This can be submitted in RFS by manual entry or a file upload. A separate certification must be submitted for each HUD 11709 P&I account and each HUD 11720 escrow account. If you would, please raise your hand if you have a reminder for this quarterly CAVs. Yay, I see a bunch. Excellent, that is awesome. Right. To navigate to CAVs in RFS, go to Pool Accounting Multifamily and click on the Quarterly Verification tab, which is highlighted in the red box. Inside the screen, you will select your user ID, the current reporting quarter, and click Go. A list of your accounts will appear. Click on the bank ABA number hyperlink to open the Edit Custodial Account Verification screen. Some of the account information will be pre-populated. Update and/or add any of the required information, including the agency ratings, and click Save at the bottom of the screen. You can repeat that for all P&I and escrow accounts. I will now turn it over to Steve.
Thanks, Debbie. I will cover the WIFIT module within RFS. WIFIT stands for the Widely Held Fixed Investment Trust Reporting. A little background, in 2006, the IRS published temporary and final reporting rules for WIFIT. Ginnie Mae provides issuers a method to report this WIFIT data to the IRS. The standard file layout to report the IRS is WIFIT, and that can be found on Appendix VI 18. You can see that link there at the bottom of the screen. Okay, it's Appendix 18, and that gives the details for WIFIT. So the data is due on the 10th calendar day. You can see of April, and that's for the January through March period, July for the April through June period, October for July through September, and January for October through December. Now, the reporting is due on the 10th and corrections by the 15th, and these are calendar days. So 10th calendar day, corrections by the 15th calendar day. All right. Now the issuers do have the ability and the opportunity at year end to correct the months of data from December of the following year to December of this year. So once that occurs, then it's set for the annual WIFIT reporting. And Ginnie Mae will publish the data on Ginnie Mae's tax and factor reporting on their website. Do know that for WIFIT, Ginnie Mae is prohibited from advising the public on specific tax matters. And so if you have specific questions on taxes, you should consult your own tax advisor regarding the specific tax treatment and tax category for any mortgage-backed security. So this is just a reporting vehicle. So within RFS, in order to access the WIFIT module, place your cursor on the RFS tab. A drop-down will appear which will show the WIFIT module. You can see under the applications there. Within the module itself, you can manually report data under the Issuers tab, or you can use the File Upload function and select the radio button WIFIT Files. So WIFIT module also provides several feedback reports on the data submitted: summary, exception, summary and detailed compliance, and a late submission report. So once you have reported data through RFS, you must continue to report using RFS. So what I'd like you to do now is provide either a thumbs up if WIFIT reporting is mandatory, or a thumbs down if WIFIT reporting is not mandatory. All right, I'm seeing some thumbs.
And Steve, then after the thumbs, we do have a question from John in the chat.
Thank you.
Mm-hmm.
All right, this is good. Good. I'm seeing some good thumbs up and some thumbs down. The short answer here is both thumbs up and thumbs down are correct. WIFIT reporting is not mandatory. It is voluntary, but once you start reporting WIFIT tax information to Ginnie Mae, you must continue to do so. And so it is mandatory once you begin, but it is not mandatory on the outset. Now, John had a question. Before 2006, were issuers reporting the data directly to RFS and investors, and now Ginnie Mae acts as a middleman for that reporting.
Steve, it looks like you said directly to the IRS and investors.
Directly to IRS and investors. Correct.
Right.
John, the answer to that, I'm not aware of what it was prior to 2006. The requirement or the ability to report to WIFIT prior to that, or from 2006 forward, is through the module, but I don't recall. I don't know if any of the other presenters have that history.
Steve, this is Nancy. I do. Prior to 2006, Ginnie Mae did not provide a vehicle for issuers reporting WIFIT data, even though it was still required by the IRS. So at one of the Ginnie Mae summits, I think Victoria Vargas reported that Ginnie Mae was incorporating WIFIT tax reporting to help the issuers meet the obligation to report the data to IRS. And again, we couldn't answer what data you were going to report, but we just wanted to give you a vehicle to be able to report that data, since it seemed to be cumbersome to the issuers. And that's how that came around. Okay.
Thank you, Nancy. It looks like John may be typing a follow-up, or John, if you want to unmute yourself and ask the question directly, you could. In the meantime, Eric, if you could clear the thumbs. All right. So John is asking, so is the reporting still required even if you don't start through Ginnie Mae? So the reporting requirement to continue is only from the point that you start reporting to RFS. So once you start reporting WIFIT tax information to RFS, it's expected that you continue. And Michelle's chiming in. That is exactly. Issuers can opt out of Ginnie Mae, but not the IRS.
The IRS has published their guidelines of what's required. So if you don't meet the requirement to report, you do not. So we have issuers that have 1,000 pools, but they may only be required to report WIFIT data on 600 of those pools, not all 1,000. So it's whatever. There's like 2 fields you have to report. So, and you look at each pool and you say, does this pool meet that requirement? If it does, you report. If it doesn't, you do not report.
Thanks, Nancy. All right. That concludes the WIFIT portion, and I will now turn this over to Nancy.
As if I haven't already been talking. Okay, so let's see. Thanks, Steve. So another important task annually is the annual financial documents, and this is in accordance with the MBS Guide Chapter 3. There are several documents that must be loaded into RFS using File Upload and the IPA radio button. The documents are due within 90 days of an issuer's fiscal year end. Appendix 6-20 provides step-by-step instructions. All documents must be in a PDF format with a specific file name. Submission dates of annual documents depends on your fiscal year end. Please raise your hand if you know your company's fiscal year end. Oh, great. Lots of hands raised. Great. If you do not know your company's fiscal year end, and usually you're the one asked to upload the documents, if you can make a note of, finding out when you upload them every year, is that the correct fiscal year end, then you'll, be able to have a leg up on the next time they're due. Okay. So here's a screen print of our file upload. We've got the custodial count verification showing. So can you please use the annotation tool and put a sticker on which type of file upload to use for your annual documents?
Eric, would you please turn on the annotation tool?
Sorry.
That's okay.
There you go. I've got my screen so far to the left I can't see that. There we go. That's correct. The IPA file, which stands for Independent Public Accountant. So great. All right. Thank you very much. I'll now turn it back over to Christy.
Thank you, Nancy. And Eric, if we could post our first polling question, please. Okay, so if we could get everyone to vote, that would be great. Our first question is, which screen do we use to complete the monthly report certification? Okay, we'll give it a few more seconds. And Eric, if you could end the poll and broadcast the results, please. And the correct answer is the RFS monthly summary screen. This is the screen in exception feedback that has the monthly certification link in the bottom right-hand corner. And then it would open up the certification screen where you would enter your soft token number to certify the data. Okay, if you could post our next question. So when are our annual financial documents due? So here you would want to pick the best answer out of the four. This is something Nancy just went over. We will give it a few more seconds. And Eric, if you would end the poll and broadcast the results, please. Thank you. So the correct answer to this is for the annual financial documents is 90 days after your fiscal year end. So yes, they are due yearly, but they are due 90 days after your fiscal year ends. Okay, so I would like to ask the AEs if you guys have anything to add. If you'd like to unmute yourself or type in the chat box before we take our break. Okay. So do we still have Michelle with us? There we go. Okay. Thanks, Michelle. No worries. Just wanted to make sure. So, okay, so now we will take a 10-minute break. When we reconvene, I will be presenting. And Eric, if you could start a 10-minute timer, and we will reconvene at 10:59 Eastern Time. Thank you. Okay, welcome back everyone from break. We will now continue with cash and reconciliations. Reconciliations of cash in TNI and PNI accounts. So we will go over all of the items listed here. So reconciliations of cash in PNI and TNI accounts. This consists of the bank account statements, your internal servicing records, and the information you reported to Ginnie Mae for your monthly activity, which the totals would be on the summary screen in RFS. Keys to quality Ginnie Mae monthly reporting are following the MBS Guide, Chapter 16 for custodial accounts, have Ginnie Mae program knowledge, reconciliation, test, and internal servicing controls. Cash management includes Ginnie Mae's access to draft funds from your account following Chapter 16 custodial account requirements, funding P&I shortfalls, completing monthly test of expected P&I recons, reconciling mortgage collateral to securities outstanding, which is also known as pull to security, and completing monthly bank account recons. Miscellaneous items would include, but are not limited to, payment querying and disbursement querying internal recons. Please give me a thumbs up if you perform the bank account recons. Okay, great. I see some thumbs and some hands. That's wonderful. Thank you. Eric, if you could please clear the hands and the thumbs. Please ensure that there are not any restrictions that would impact Ginnie Mae's ability to draft funds from the central P&I accounts on draft days, including that there are not any ACH debit blocks. Issuers should have a procedure in place for communicating with Ginnie Mae and Bank of New York Mellon, its CPTA, if any problems arise. This includes guarantee fee drafts. Another best practice is 1 business day prior to the draft, ensure that your account is fully funded and that there are no issues. Confirm funds have been drafted from the account on the day of the scheduled draft. If the funds were not drafted, directly contact your bank. Also, provide your Ginnie Mae account executive the plan to remedy the draft failure. Using a thumbs up, let me know if your company has a process to ensure that the bank accounts are fully funded on the day of the draft. Wonderful. I'm seeing lots of thumbs. That is great. Eric, if you would clear the thumbs. If your company does not have a process for this, please make sure that one is created. Your collections clearing account or payment clearing is an optional account. This account can be used for Ginnie Mae and non-Ginnie Mae funds. This account needs to transfer to Ginnie Mae P&I and TNI accounts within 1 business day. You may recover corporate advances provided excess funds are restored to the custodial account from this account. Also, this should be a zero balance account, which means you should be able to show detail of every cent that is outstanding in this bank account. For liquidations, the clock starts from the post date, the date of the deposit on the bank statement. Since issuers do not post payments received after hours until the next business day, they have 1 business day from the date of the post deposit. Ultimately, the funds need to be deposited into the Ginnie Mae P&I account within 2 business days of receiving the funds. Here are the P&I custodial bank account requirements. This account can be Ginnie Mae funds only. It must be a single non-interest-bearing custodial account. It may contain funds for more than 1 pool. A HUD 11709 form must exist for each account, which is actually part of the master agreements. It must be maintained at an ACH-capable financial institution. The bank account recons must be completed timely, which is within 30 days of your Ginnie Mae cutoff date. It must meet CAV's banking requirements. Please raise your hand if you manage these bank accounts. That's great. Look at all those hands. That is wonderful. And Eric, if you could clear the hands, please. If you have a P&I disbursement account, here are the requirements. You may use a separate disbursement account. It must be non-interest bearing and a zero balance account. It must be maintained at an ACH-capable financial institution. It must only contain Ginnie Mae funds, so no commingling is allowed. It may be for 1 Ginnie Mae issuer ID per account. And the master agreement, the HUD 11709, must exist for this account. I will now turn it over to Debbie.
Thank you, Christy. And now for the T&I custodial bank account requirements. This account may be interest-bearing. It does not have to earn interest, but it may. This account must only contain Ginnie Mae funds. It must have a HUD 11720 for each account in the master agreement. Just like the P&I accounts, the T&I bank recons must be completed timely, which is within 30 days from the issuer's cutoff. And it must have a separate escrow custodial account for 203K FHA funds and separate escrow custodial accounts for any FHA or RD USDA requirements for other funds. P&I accounts are subject to custodial account verification, also known as CAVs. It is required when the total FIC or P&I payments are equal to or greater than $100,000 in any month per Appendix 619. Also, project loan escrow accounts for any project equal to or exceeding $100,000 require CAVS reporting. Per the agency rating requirements, institutions are required to meet at least one of the following institutions serving as funds custodians with assets of $30 billion or more must have either a short-term rating by S&P of A3 or better, a long-term by S&P of BBB or better, short-term deposit rating by Moody's of P3 or better, or a long-term deposit rating by Moody's of Baa3 or better. 30 billion or less asset institutions must have IDC ratings of 125 or better, or a Kroll rating of C+ or better. Depository institutions must meet the following 3 requirements. Must be insured by FDIC or NCU SIF, must be rated as well capitalized by its federal or state regulator, and have a rating that meets or exceeds at least one of the agency rating requirements specified. CAVS is due quarterly in March, June, September, and December between the 6th and 15th business day. P&I temporary shortfalls may be caused by mortgagor late payments or NSF checks from mortgagors and incorrect advance calculations, just to name a few. Here are a few non-recoverable corporate advance permanent shortfalls, including but not limited to adjustments, loan removals, and T&I shortfalls. The loan payoff shortfalls for FHA loans may be the difference in the liquidation interest paid by the borrower and the remaining interest due through the end of the month that needs to be funded to your P&I account. And if you could please turn on the annotation tool. Using the annotation tool, place a sticker on the method your company uses to fund P&I shortfalls if you happen to know. And while we're doing that, companies can use their own funds as corporate advances. Excess funds, which are unscheduled recoveries of principal on the pool, which may be found in MBS Guide Chapter 15-5, or the pool advance agreement using bank funds. And also Appendix 6.1 must be completed. And it looks like the majority right here is corporate advances. All right. If you want to clear the screen. Okay. If you use your corporate advances to fund your P&I shortfalls, ensure you advance the funds to the P&I account prior to the Jennie Mae ACH draft on the 15th calendar day. Ensure you recover the corporate advances properly and document all advances. To calculate corporate advances, take your P&I bank balance minus additional principal payments and liquidations not passed through until the following month, minus prepaid installments and guarantee fee, which gives the adjusted bank balance. Then subtract the amount due to security holders. Any overage is a positive number, and any shortage is a negative number. Excess funds are unscheduled recoveries of principals on pool prepayments, and you can see MBS Guide Chapter 15.5. I will now turn it over to Christy.
Thanks, Debbie. Corporate advances using excess funds are unapplied funds, service fees, and pools sharing the same custodial account. Corporate advances using excess funds are calculated by taking the P&I bank balance minus guarantee fees, which gives you the adjusted bank balance, then subtract the amount due to security holders. Positive numbers are an overage and negative numbers are a shortage. Using the thumbs up, please let me know if you review your test of expected P&I. Okay, I'm seeing a pretty good number of thumbs, so that is great. Eric, if you could clear the thumbs. The test of expected P&I is required on every pool and performed by the issuer. It provides the P&I account minimum dollar amount and all pool cash shortages funded by the issuer. You may not net pools that have cash overages with pools that have cash shortages. A best practice would be to fund your P&I account for any positive differences in one transaction, then withdraw funds from your P&I account for any negative differences in one transaction. Retain the pool level documentation for these transactions for audit purposes. Also, the test of expected calculation is only accurate when your pool to security recon is 0. Here is a test of expected recon. Most servicing systems will complete a similar test of expected recon report like the one displayed. Using the thumbs up, let me know if you review your recon of mortgage collateral to securities outstanding or your pool to security recon. Okay, wonderful. I see quite a few thumbs. Eric, if you could clear the thumbs, please. The pool to security recon is required on every pool and performed by the issuer or your servicing system. If the pool is over-collateralized, the adjusted pool principal balance is larger than the security balance, and you need to recover unscheduled principal from liquidations or curtailments. There is up to a $100 tolerance per pool if no unscheduled recoveries of principal. Under-collateralized means that the adjusted pool principal balance is less than the security balance and you need to remit principal, most likely by a corporate advance. There is a $1 per loan per pool tolerance with a maximum of $50 per pool. Also, with these being multifamily pools, each project is different. Therefore, if you have passed through too much money and now have a pool to security difference, please contact your Ginnie Mae account executive for guidance. Here we have a pool to security recon. Most servicing systems will complete a similar recon like the one displayed. So now we'll move on to the P&I recon. Here's a sample format of a P&I recon, a P&I account recon. Most issuers actually build this form in Excel. Your bank recons must be completed within 30 days of the issuer's monthly reporting cutoff date. The cash flow method is the balance at the end of the previous month plus the daily deposits minus the disbursements, which equals the ending P&I cash book balance. This is reported in field 12 of the pool record and is displayed at the bottom of the pool screen. An important note, all adjusting items on the recon must be completely resolved within one of the next 2 reporting cycles. If you have outstanding unreconciled items, it may result in an audit finding. So now on to the T&I recon. Here's a sample format of the T&I recon. Like the P&I recon, most issuers build this form in Excel. Just like the P&I recon, the T&I recon must be completed within 30 days of the issuer's monthly reporting cutoff date. T&I funds are required to be deposited into the Ginnie Mae escrow account within 2 business days, which is 48 hours of the pool settlement. Field 11 of the pool record should be the total escrow amount. An important note, within the next 2 reporting cycles, all recon adjusting items must be resolved. In the large red box on this pool activity screen shows where all the bank account balances are reported on the pool level. These balances can be reported on the RFS file or entered manually online. The Save and Sum Pool button at the bottom of the screen in the red box needs to be clicked when any information on this screen is updated, or if any loan level fields are updated, as certain loan level information is moved to the pool screen behind the scenes. Also, if you click on the small plus sign on the bottom left-hand corner, the custodial bank information is displayed. This is where you would update any of the bank account numbers or the ABA numbers. Be sure to click the Save and Sum Pool button if you have made updates to this screen. So Eric, if you could post our next question, please. Thank you. So if we could get everyone to vote, that would be excellent. So what is the time limit to complete your bank account reconciliations? This is something I just went over for the T&I and the P&I recons. We'll give it a few more seconds. Eric, if you would end the poll and broadcast the results, please. Thank you. So it looks like 92% selected the correct answer, and it is 30 days from your cutoff. The next question, please. Okay. So when is an issuer required to submit their custodial account verification? And also, speaking of the custodial account verifications, we are within the 6th and 15th business days. So if you guys haven't completed your custodial account verifications, it would be a good time to go get those completed. So Eric, if you will end the poll and broadcast the results, please. So the correct answer is C, when the FIC equals $100,000 or more, and that is something that Debbie went over a little bit earlier. If you could post our last question here.
Christy, while that's going on, looks like John is typing two questions.
Thank you, Steve. Okay. So what is the purpose of our pull to security recon, which is also known as the reconciliation of mortgage collateral to securities outstanding? Okay, we will give this one a few more seconds here. And Eric, if you could end the poll. So the correct answer here looks like 90% got it correct. It is to notify the issuer of collateral to securities discrepancies. So thank you, Eric. Okay, and then John's first question is there a certain size for an issuer that they would be required to start using Ginnie Mae as a middleman for WIFIT reporting? Steve, would you like to take that one?
John, there is not a certain size limit.
Okay, thank you, Steve. So then the other question is, if you have unscheduled principal collection, how does that impact the RPB and what the investor is due for future P&I payments? Okay, so if you have unscheduled principal, you do need to report that on the pull record, so that does lower the RPB. So, but for future, so it lowers the RPB and it is passed through to the investor. So for the future P&I payments, so the P&I payment should be the same, because that would be your FIC, as long as it is an amortizing loan. And it does look like Michelle is typing something. And Nancy, do you have anything to add there? Okay.
I was just looking at what Michelle typed. And I don't know if it's I don't think it's any different from single family or multifamily, but just because you have a large curtailment or additional principal that are not claim funds,
Right.
the
I mean,
FIC,
if you do have unscheduled principal, then the
interest rate
spread
would
of the
change on the
P&I would
loan.
change.
It stays the same.
Because you would have less interest and more principal, but still the total P&I payment would stay the same.
The only point to remember is that in your system, hello, this is Bob now.
Okay.
In your system, because nothing changes, the FIC is not interest rate. The loan matures.
And then it does look like one of our issuers has unmuted. So do you have a question or?
No, this is Bob Patel from CBRE.
Okay.
Hi. We just to
okay. Ryan, could you mute? Thank you. Thank you. Okay. So now I will turn it over to Nancy.
Christy, Bobna was trying to explain. Christy, hold on.
But we were just having trouble with the microphone. It was a little faint.
Okay, Bhavna, are you still? Bhavna was trying to explain something. I don't know if you could not hear her, but you cut. She was cut off.
Oh, and Nancy, you were breaking up there.
Bhavna, do you want to unmute and go ahead and tell us what you were saying?
Oh, and now it seems fine. Maybe it was just a little thing.
No, that's not right. I moved over to that Chrome today.
Yes, thank you, Nancy. I was just letting everybody know that on unscheduled principal, since
so Bhavna, can you hear me? Go ahead and unmute and tell us what you were saying.
In your servicing system, the pool matures earlier because the principal is now lower.
Right. Thank you so much. Okay, so on this slide, we want to touch on some of the best practices, and I do want to go back and talk about bank recons just for a second. The requirement is 30 days from cutoff. So if you cut off on the last business day of the month, and the next month has 31 days, and you complete and date your recon on the 31st, and field review comes in, they will write you up. You missed the 30-day deadline. And that's just one of the items that they look at and review each time they do a field review. So again, so best practices, and we've gone over this several times, 100% of pool and loan data by the second business day, and by the fourth, E and C levels alerts are cleared. We would like to see consistency of data reported in RFS. The prior month data must roll correctly into the current month data. So if you have an LPI date, the last payment of May, and we only see one payment as a collection, then your LPI date should not increase more than 1 month. The case number reported on your loan file should match the case number reported at origination, as long as that case number was correct. Issuers are fully responsible for meeting the reporting timelines and any accuracy of the data reported by their subservicer. Adhere to your established cutoff dates, and we look at your cutoff dates. They are actually reported at some time when you become an issuer. If we have a new issuer, we ask what their cutoff date is, and we enter that into RFS, and we're able to review your cutoff date with the date you reported your data. Ensure that the correct liquidation removal reason code is reported. This is also a field review area. They look at that. Analyze and correct your RFS edit exceptions per severity level, and please review your e-notification daily. Eric, could you turn on the annotation tool? Can you please put a sticker on the practice that you think is the most important? You can use one or more stickers. Ooh, I think y'all just like to use the stickers. And you're correct. Every single one of these are important. The first one we have listed, reporting 100% of pool and loan data. That is very important. It's one of the first requirements. And if you do not report all of your data, you're reported to Ginnie Mae Operations, which you may be could result in a monetary penalty. We also report you to the multifamily AEs, and they're very strict on this. Anyway, okay, so yes, they are all important. And can you remove the stickers, please? So what we want to know at this time, does anyone have any questions that they would like to ask? And also wanted to remind you that at the end of this session, we have a survey for you to complete. So let's open everything up and see if there's any questions. You can either have your microphone opened or you can put it in the chat box.
And if the multifamily AEs have anything to add?
And I do want to thank everyone for attending these sessions.
Thank you, Michelle.
And you're welcome, Joe. Yeah, you're
Yep,
welcome,
that
Joe. And yeah,
Michelle
I miss
said,
talking to
contact
you
us
every
with any
month.
questions. Yep, that's great. Okay.
All right. I really don't see any questions, so do we want to turn this
okay.
back over?